Mastercard versus crypto. Bitcoin hits record as Mastercard, BNY Mellon embrace crypto by Bloomberg. Bitcoin jumped to a record high after Mastercard Incorporated and Bank of New York Mellon Corporation moved to make it easier for customers to use cryptocurrencies. The largest digital asset rose as much as 8.1% to $48,663, surpassing the all-time high reached Monday after Tesla Incorporated announced it would hold $1.5 billion of the cryptocurrency on its balance sheet. The wider Bloomberg Galaxy Crypto Index also touched a record.
Higher and higher seems to be the direction from here, Sherry. Both MasterCard and BNY Mellon gave Bitcoin prices a shot in the arm, sending the digital asset up more than 8% intraday to a new all-time high of 48,663, and that's above the previous record set just on Monday as Tesla made a big bet on Bitcoin. Mastercard has already partnered with crypto card providers, but was previously requiring digital conversion before it would process. Now it plans to make the process a lot easier, focusing on stable coins, which peg their value to the dollar. Bank of New York Mellon said it will hold, transfer, and issue Bitcoin as well as other cryptocurrencies for institutional investors. Again, all of that helping to accelerate the momentum in Bitcoin. Interest in cryptos, as we mentioned, accelerated on Monday. You can see in the Bloomberg, that's when Tesla CEO Elon Musk made a huge bet, saying that Tesla would be investing $1.5 billion in the digital coin and will begin accepting it as payment. You can see Bitcoin taking off for the moon, even as the rally in Tesla shares has calmed down. And many Bitcoin supporters believe it's this kind of mainstream acceptance that presents the perfect storm to send the currency higher, even though J.P. Morgan Chase says many other firms are unlikely to take the bet as bold as Tesla's. Paul?
Yeah, Bitcoin has plenty of supporters, Sue, but plenty of detractors as well, among them a key banking regulator. Tell us why Sheila Bair's not buying it.
Oh, real quickly, Sheila Bair is a former head of the FDIC, Federal Deposit Insurance Corp. It's known for those early warnings on the subprime mortgage crisis. She's now warning about Bitcoin, saying it's at nosebleed levels and its volatility gets in the way of its usefulness. She also said to Bloomberg Radio, stay away from it. Fine for wealthy people to dip in and take the risk, but she doesn't have a lot of faith in it. And again, if you look at the Bloomberg, you can see what chart watchers are saying, that the technicals indicate the bullish momentum is setting up for Bitcoin to go even higher. Meanwhile, Janet Yellen recently warned that misuse of cryptocurrencies is a growing problem. She is now, as you know, the Treasury Secretary. Back to you.
Why Mastercard is bringing crypto onto its network. By Raj Damodaran. Whatever your opinions on cryptocurrencies, from a dyed-in-wool fanatic to utter skeptic, the fact remains that these digital assets are becoming a more important part of the payments world. We are seeing this fact play out on the Mastercard network, with people using cards to buy crypto assets, especially during Bitcoin's recent surge in value. We are also seeing users increasingly take advantage of crypto cards to access these assets and convert them to traditional currencies for spending. To be clear, this data is not of any individuals, it's anonymized in an aggregate, but the trend is unmistakable. We are preparing right now for the future of crypto and payments, announcing that this year Mastercard will start supporting select cryptocurrencies directly on our network. This is a big change that will require a lot of work. We will be very thoughtful about which assets we support based on our principles for digital currencies, which focus on consumer protections and compliance. Our philosophy on cryptocurrencies is straightforward, it's about choice. Mastercard isn't here to recommend you start using cryptocurrencies. But we are here to enable customers, merchants and businesses to move digital value, traditional or crypto, however they want. It should be your choice, it's your money. Doing this work will create a lot more possibilities for shoppers and merchants, allowing them to transact in an entirely new form of payment. This change may open merchants up to new customers who are already flocking to digital assets, and help sellers build loyalty with existing customers who want this additional option. And customers will be able to save, store and send money in new ways. We want to help these concepts flourish and reach their potential, while also developing and encouraging the necessary guardrails. We are here to enable customers, merchants and businesses to move digital value, traditional or crypto, however they want. It should be your choice, it's your money. To be completely clear, not all of today's cryptocurrencies will be supported on our network. While stablecoins are more regulated and reliable than in the recent past, many of the hundreds of digital assets in circulation still need to tighten their compliance measures, so they won't meet our requirements. We expect consumers in the ecosystem as a whole will start to rally around the crypto assets that offer reliability and security. It's those very same stablecoins that we expect to bring into our network. What are we looking for? 4 key items. First and foremost, we need consumer protections, including privacy and security of consumers' information, the same level of security people have come to expect in their credit cards. Next, strict compliance protocols will be needed, including Know Your Customer, a requirement meant to snuff out illegal activity and deception in payment networks. Also, these digital assets must follow local laws and regulations in the regions they are used. Lastly, people will want to use these digital assets for payments, so that is one of our criteria too. To reach your network, crypto assets will need to offer the stability people need in a vehicle for spending, not investment. We are already working hard to provide this consumer choice for cryptocurrencies. We teamed up with WireX and BitPay last year to create crypto cards that allow people to transact using their cryptocurrencies. We added to those partnerships this year by joining forces with Level, an up-and-coming cryptocurrency exchange. These relationships, with many more planned in the pipeline, built on our many years of crypto collaborations. In all of these cases, cryptocurrencies still don't move through our network. Our crypto partners convert the digital assets on their end to traditional currencies, then transmit them through to the Mastercard network. Our change to supporting digital assets directly will allow many more merchants to accept crypto, an ability that's currently limited by proprietary methods unique to each digital asset. This change will also cut out inefficiencies, letting both consumers and merchants avoid having to convert back and forth between crypto and traditional to make purchases. Added to this work, Mastercard is actively engaging with several major central banks around the world, as they review plans to launch new digital currencies, dubbed CBDCs, to offer their citizens a new way to pay. Last year, we created a test platform for these banks to use these currencies in a simulated environment. Using our deep experience in payments technologies, we look forward to continuing these partnerships with governments and helping them explore the best ways to develop these new currencies. With 89 blockchain patents granted globally with an additional 285 blockchain applications pending worldwide, we already have one of the payments industry's biggest blockchain patent portfolios to draw from to make these projects successful. We are inspired by so much of the work going on in the payments world, in banking, in emergent fintechs, in crypto, to push forward change. And we are doing as much as we can to set the stage for these players to take the next step forward. Thank you for watching this video. If you liked the video, do share with your friends. Make sure you are investing into crypto.